One of the important responsibilities of every employer is to make timely and accurate payroll tax deposits to the Internal Revenue Service. Payroll taxes may not be glamorous, but they're absolutely essential. Knowing when to deposit, how often, and why the Internal Revenue Service looks back before moving forward can make the difference between smooth payroll processes and costly penalties. The frequency with which the employer makes the payroll tax deposits depends on the amount of the employer's payroll tax liability during the current and the look-back period. The 5 different schedules for an employer's deposit of payroll taxes are annually, quarterly, monthly, semi-weekly, and next business day. It's important to remember that the deposit frequency has nothing to do with the frequency that the payroll is paid by the employer. That means that a business that pays its employees weekly may only be required to deposit monthly. Or if the business has a large payroll tax liability, maybe when paying out bonuses, exceeds $100,000 and is required to deposit the related payroll taxes on the next business day. The most common deposit schedules, though, are monthly and semi-weekly. That's a lot of information, right? Don't worry if that sounds confusing. Let's look at the criteria for each of the deposit frequencies. The first frequency is annually, and this only applies if the employer has perhaps occasional employees and the total payroll tax liability is $1,000 or less. In that case, the business would file the annual employer tax return Form 944 and deposit the payroll taxes by January 31st of the following year. For now, let's skip over quarterly and talk first about the monthly frequency. If the employer has $1,000 plus in payroll tax liability, but equal to or less than $50,000 during the look-back period, then the company needs to deposit the payroll tax amount by the 15th of the following month. For example, taxes on the January payroll would be due on February 15th, or the next business day if February 15th falls on a weekend or a holiday. And taxes on the February payroll would be due on March 15th, and the taxes on the March payroll would be due on April 15th. At the end of the quarter, you complete Form 941, the employer's quarterly payroll tax return, to reconcile the payroll wages and the tax payments you made. And you discover that you have some rounding differences or errors. Let's just say it's $50. Now, if that happens, you will need to deposit the difference of $50 by the 15th of the month following the end of the quarter. So that is the quarterly frequency for those cases where you have rounding differences, errors, or undeposited amounts. All right, that brings us to the semi-weekly frequency. If the business has more than $50,000 in payroll tax liability during the look-back period, then the payroll taxes must be deposited either on Wednesdays or Fridays. For payroll paid on a Wednesday, Thursday, or Friday, the payroll tax deposit is due the following Wednesday. For payroll paid on a Saturday, Sunday, Monday, or Tuesday, the payroll tax is due by the following Friday. Now, if the business's payroll tax liability is $100,000 or more for any payroll period, then the deposit for the payroll taxes needs to be made on the next business day. This is already complicated enough, but just to add a little bit more to it, there is an exception for monthly filers who during the current quarter or the prior quarter had less than $2,500 in payroll tax liabilities to deposit. They can do so with their quarterly 941 tax return. You can read all about it in the IRS Publication 15, or also called Circular E. Okay, I've talked about the look-back period several times because the payroll tax deposit frequency of monthly and semi-weekly is based on the look-back period. But what exactly is that? First, employers don't have to figure out the frequency with which to deposit the payroll taxes on their own, except really the next day deposit requirements, right? But other than that, the IRS informs businesses in writing if they need to deposit their payroll taxes annually, monthly, or semi-weekly based on the deposits during the look-back period. Here are the rules. For employers filing Form 941, the employer's quarterly federal tax return, the look-back period for 2024 is the 4 quarters starting July 1st, 2022 and ending June 30th, 2023. This includes the third and fourth quarters of 2022 and the first and second quarters of 2023. You determine your deposit schedule monthly or semi-weekly for 2024 based on your total tax liability during this period. For employers filing Form 944, employer's annual federal tax return, the look-back period for 2024 is the 2022 calendar year, January 1st to December 31st, 2022. This applies if you filed Form 944 in 2022 or 2023, or if you're filing it in 2024. All new companies are monthly scheduled depositors unless they have a total payroll liability over $100,000 during any pay period. It's important to note that the tax deposit due date is based on the payroll disbursement date, not the pay period ending date. We've talked about the deposit frequency and the look-back period. But how does a business actually send the money to the IRS? The answer is that it is done electronically. Electronic tax deposits are usually processed through the Electronic Federal Tax Payment System, EFTPS website. However, the IRS allows employers to transmit payments through certain financial institutions via automated clearinghouse, ACH, or wire transfer. When using the EFTPS, the employer must register with the IRS to access the site. If the business is using a payroll service like ADP, the payroll service can remit the taxes on your behalf. However, keep in mind that you have to send the tax payment to the payroll service first so that they can remit the payment on the business's behalf. What would that look like? Let's say the payroll period ended August 3rd, 2025, as Sunday. On Monday, the business reviews all time cards for hourly employees and salary information, vacation, sick time, and other payroll payments, and submits it to the payroll service. The payroll service may have the payroll produced by Tuesday or Wednesday for a Friday pay date. The payroll checks or direct deposits are drawn from the business's bank account, but the payroll tax deposits are made by the payroll service, and they need the tax funds in their account before the tax deposit is due, typically a day or two before. Most companies allow ADP or other payroll services to draft the money out of their account for payroll taxes, but if it is a large amount, it may require the company to initiate the wire, and sufficient account signers have to be available to sign off on a large wire. Trust me, it can get complicated. Even when you're making the deposit via the EFTPS, you must submit the deposit by 8 p.m. Eastern Time the day before the date the deposit is due. If you use a third party to make a deposit on your behalf, they may have different cutoff times. You can make same-day tax deposits via wire transfer, but that also requires that you make arrangements with your bank ahead of time. Here are 4 practice exercises. Generational Coffee is a company based in Wenatchee, Washington. During the look-back period ending June 30th, 2023, the company had $36,549 in total payroll tax liability. What is the company's deposit frequency? Generational Coffee would be a monthly scheduled depositor. Payroll tax deposits would be due on the 15th of the following month, meaning June 15th for the May payroll taxes. Number 2, what deposit schedule must all new employers with payroll tax liability in excess of $100,000 on any pay date follow? In this case, it doesn't matter if it's a new or existing employer. If the tax liability is above $100,000, then the payroll tax liability must be deposited the next business day. Number 3, Leap Off Tours has had a payroll tax liability of $67,553 during the look-back period. How frequently must the firm deposit its payroll taxes? In this case, the amount during the look-back period is greater than $50,000. So this business is required to deposit semi-weekly. It doesn't tell us what day of the week the pay date is, but let's assume it's on a Friday. Then the deposit would be due by the following Wednesday. Number 4, Bati Companies based in Ohio is a semi-weekly scheduled payroll tax depositor because of the total payroll tax liability of $693,259 during the look-back period ending June 30th, 2023. The company had a total payroll tax liability of $110,290 during the August 16th, 2024 payroll period. In this case, the deposit is required on the next business day for the August 16th, 2024 payroll period. The IRS assesses penalties and interest if the business does not deposit payroll taxes on time. It starts off at 2% of the unpaid deposit if the tax deposit is late by 1 to 5 days. The tax is unpaid between 6 and 15 days. The penalty is 5% of the unpaid deposit. More than 15 days, the penalty is 10%. If you received an IRS notice and you don't pay within 10 days or immediately if the notice requires immediate payment, the penalty increases to 15%. That is why it's so important to have good internal controls in place and tight processes to ensure that all things payroll are in full compliance and taxes are deposited accurately and timely. I hope you enjoyed this video and it helped you understand the concepts of payroll tax deposits, frequency, look-back period, and deposit penalties.